Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. I've got a bunch of comments here. I want to kind of go over and touch on some of the questions, comments. So one of the questions is basically, how high do I see platinum going from my perspective? It depends on many things. When I was looking at palladium back in the day, and let's say palladium was like $300. I wouldn't have guessed that it was going to go to $2,500, $2,800 an ounce. And then looking at it from a platinum perspective, I think that we are way cheap. It's possible that it goes to 10,000. It's possible that it goes to 30,000. It depends how much inflation we have in the system alongside this supply and demand, because I think you have two big components in there. You've got inflation, and then you've got the supply and demand on top of it. So if gold were to go up, let's say gold goes to 10,000, I could easily see platinum go to 20,000, $20,000 an ounce. Now you're going to say that's ridiculous, but you're not putting that inflation component in it. A lot of people forget the inflation component. So they're used to this 40-year decline in interest rates. 40 years. What if that reverses? What if we're going to start a secular bull market in interest rates going up? And I'm going to tie this with something else. There was another question I was reading. They said, well, how do people afford to buy homes? Well, when you have 2 months of inventory and a large shortage of homes, they need to become less affordable. They need to spur more homes being built. More new homes need to be built to satisfy the demand that is out there. We are 4 million homes short on the new home builds. We need 5.5 million more homes this year, or we have to build 3 million every single year till we catch back up that 4 million home deficit. So homes are going to become less affordable. Now, in the 1970s, a similar scenario happened. We had a lot more buyers than we had sellers. Home prices in some areas went up 10 times, 10x the house. So I think what people are missing here is that there could be a potential where home prices go up quite a bit. Now, we also have inflation. So now people are going to be they're going to be confronted with a scenario or a situation where they say, all right, my rent price is going up at 5 or 10% per year. I'm getting paid more. Maybe it's 5% a year more or 10% or something, because if inflation does hit, companies are going to have to pay up for their people to pay, and they're going to be competitive. The economy's rolling at that point. And people are going to have to be confronted with, do I rent at $3,000 a month, or do I buy a house and lock in my cost at $3,000 a month? I know that seems like a lot, but there's a lot of people that I know that can't buy homes. Like, they want to buy, but there's no homes to buy. There's nothing. And everyone's starting to compete and bid after homes. These homes are now going for $20,000 to $100,000 over asking price here in Colorado Springs. We have record low inventories. There's no homes. We have 15 to 20 buyers for every single house that's available. And then they just go to bidding wars. There was a house across the neighborhood. They were asking $520. It went for $601. It's ridiculous. That's a lot of money to be being bid over the asking price. So I think you guys are looking at it from the perspective, how can people afford homes? I'm looking at it like, we need less people to afford homes because there's no homes to buy. That means house prices are too cheap. In where I live, house prices are probably $100,000 too cheap. $100,000, because when they go on the market to sell, they're all selling for vastly over the price that is being asked. And the market determines price. Now, what's difficult with some of these buyers is they're going to have to get loans if they have loans for it. And what's happening is the housing problem is so bad that people are getting like pre-loans and bidding, so they have this pre-loan money as a, quote, cash offer, or where they have to finance a lot less of the offer, because the people who are taking the majority finance, they're not getting the homes. They're gone. Like now it's like cash buyer versus a guy who's going to put down 60% of the house. And those are the people who are getting it. They're bidding 20, 30, 40, 50 over. There's no homes. The problem is there's no homes. We are underbuilt by 4 million homes nationwide. Now, when the moratoria, like if it resets, will homes come on? Yes, but it's not going to be enough to overwhelm the demand. You're going to need a lot more than what's out there. That's my opinion. And if these homes come on the market, why don't they just sell their house? Just sell the house, throw it on the market. It's going to be gone in less than less than a month for most cities. And they're going to probably get asking price or more. It'd just be like, here's a house, boom, gone. Well, I just made 150,000, 200,000, 300,000, whatever those people, whoever lost their jobs, they have equity in the house. Sell the house. This isn't underwater 2007 land where everyone's underwater, their mortgages are all underwater, and they're like, I owe like 50, 60,000 on this house or 100,000. Take it. Just take the house, foreclose on it. We're not in that same scenario, guys. It's completely different. I don't know who would foreclose on a house. Just sell the house. These guys who are saying all the foreclosures, why would you foreclose if you're up 50 to 100,000 on the house? There's people who bought homes 1 year ago in Colorado Springs that could sell their house for $50 to $100,000 more right now. 1 year holding time. Why would you foreclose? Sell the house and get the 50 to 100 grand on top of whatever you put down. And remember, even a year, 2 years, 3 years ago, people were bidding multiple bids all on these homes for the majority of them. And if you're bidding on it, you're most likely putting some money down. So there's some equity in the house. I don't know of anybody who's putting zero down. They don't get the house then if you're putting zero down. At least not here in this city. So that's my take on platinum. That's my take on real estate. Real estate is very strong at the moment. And what I would want to see is that inventory would have to creep up first. Days on the market would have to get longer. House prices got to slow down. All that has to turn around. I haven't seen that yet. Everything else is speculation, where we are massively speculating on house prices and all these homes coming on. It's a scenario that nobody knows. Nobody knows those exact numbers. They may say, okay, 3 million people are late on their payment. All right, well, how many are actually going to foreclose? I would say 0% because they could just sell the house, or a very small percent. Let's say 5%. 5% will foreclose. And then the rest, maybe half of them, maybe they get jobs back. Maybe the other half, they're 1.5 million or so, or 1 million homes. Maybe we get 1 million homes on the market. And you know what? I don't think that's going to do much. I really don't, because we've got a 4 million home shortfall that we have to still continue to build. Look at the home builder stocks. I bet you their stocks are going to go through the roof. Now, I don't know how much money they're going to make, but they're going to be building a lot more. Remember, inflation is going to eat at their margins, and it's going to push the price of homes higher and higher and higher and higher. And that's why I'm so big on physical precious metals, because you're taking the inflation portion out of it. You're saying, I'm going to invest my money, I'm going to put it in this physical metal, and if inflation goes up and the demand for that product goes up, you've got the inflation component in there and the supply and demand component in there. In a company that produces it, and I just read an article to everyone about Impala Platinum making the comment that major investments need to happen in order to produce more platinum. And it's deeper and harder to get, and they don't know if they can make money to do it. If they can't make money, there's two things in that article that hopefully you guys caught on to. And maybe I didn't explain it clear as day. All right. So number one is a company came out and said, look, we need to put major money into this. Number two, they said that even if they put major money into it, they don't know if they can make a lot of money doing it. So if they're putting major money in it, they're going to need far higher prices. That is your floor that's going up, the floor of the cost curve. So your high cost producers that might cost $1,200, $1,300, $1,400, what if it's $2,000? What if it's $3,000 that they're going to need to pull a whole bunch of metal out of the ground? If you know that it may cost $3,000 for them to pull it out of the ground, if it goes to $3,300, they're not going to make that much money more than what they already are today, because this is the new stuff that's coming online. So their margins may still be at 20% at $3,300. But if you buy the physical, you get the entire upside of it. When things become more scarce, holding the physical commodity is what you want. If your energy costs become more scarce and go up, you're protected against that. Because what happens is the cost curves go up and up and up and up. If it gets harder and harder to extract, your cost curves continue to go up. Your floor of where the price of that commodity is at, it continues to go up. The companies don't make any more money. They're not making obscene profits at 3,000. That's what's required to produce from the high cost producers. And if they're depleting all of the old stuff that's cheap, they're going to have to start producing from the high expensive stuff. They're not making any more money if it goes to 3,300 if they depleted the old stuff and they have to go to the new. But if you're holding the physical metal, well, that's all upside to me. Even if inflation is just a little bit. What if inflation is 10%, but the price has to go to 5,000 or 10,000 an ounce on some of these really rare metals to actually yank them out of the ground? I don't know what the necessary prices are. Maybe it's 3,000, maybe it's 4,000. I don't know. Maybe silver needs to be $50. Maybe it needs to be $100. If we're going to use as much as we want, maybe it needs to be $1,000. I don't know that exact price, but some of these companies aren't going to be making more money if they're the high cost producers. You're going to have to go with the low cost who has depleting assets, or you just buy the physical and hold on and say, I'm in, I'm good. Like, let these guys duel it out, and whatever the price will be is going to be the value to society, because that's where demand's going to get eroded, and wherever that supply demand will start equaling each other out. And I don't know the exact numbers. And if you've got inflation all mixed in there, mixed in this big pot, just means higher prices. The cost curves all go up. And remember, energy, I still think energy could get into supply problems in the future. Energy is vital to mining whatever mineral. And if you have energy problems, especially with oil, it just means higher prices. And the companies aren't going to benefit if they have higher input costs. It's royalty companies and physical precious metals that will benefit out of this. And that's why I'm so heavily into royalty companies and then the physical precious metals. Because you can play games, the ratio games with physical precious metals, and then you don't have that with royalty companies. You don't have the mining costs. You can forget about that. But those are the two things I wanted to touch on. I think real estate is strong. I have to see the near-term measures have to change for me to change my viewpoint. I can't be like, I can't make that leap of faith yet, where someone says there's going to be a problem coming up and we're going to have a couple homes. I don't know. They don't know how many homes are going to come online. Nobody knows that. And all of the metrics that we measure real estate by are getting worse, not better. So I can't make that jump yet. I have to see some data change before I'm like, all right, we're seeing this. Remember, these things don't change quickly. It took 2 years for the metrics to get to worsen quite a bit in the last crash, and that's with 10 million delinquent loans with a filled up inventory already. Now we have record low inventories, and we have a potential for maybe 1.5 million to come on, at most 3. So I got to see it in the data first. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments below on what you guys think. Thanks for listening. This is Finding Value.